right, welcome to the daily market recap for Tuesday, July 8th. In this video, like all the daily recaps, we'll go through the indexes, the liquid leaders, some industry ETFs, then end the video with long and short setups going into tomorrow. Before we get started, Deepvue, the platform that we're going to be using for the review, is having a promotion through July 27th where you can try it out completely free. You don't even have to add your credit card information. So if you want to give it a shot and use it how I do, I linked all of my watch lists, screeners, column sets, and data panels along with the link to Deepvue in the comment section, the pinned comment there. Make sure you try it out. And if you have any questions, please let me know. All right. Jumping into it, we have, let's go through the indexes. NASDAQ, very tight trading today on lower volume than yesterday. Still closing over this small support gap from Thursday's gap up and closed right at the 5-day moving average. So index-wise, we still have this overhead gap down, which is not ideal. The sooner that we can fill that, the better. That is kind of like one warning sign that I look for, but two tight trading days above the 5-day moving average after a nice rally isn't the worst thing in the world. We'll see if we resolve to the upside, closing this gap up or gap down, or resolve to the downside, kind of test the 10-day moving average here. Next, we have the S&P 500. Very tight trading today, closed right on the 5-day moving average and did close below Thursday's gap up. So we've removed that gap up zone. Now we just have the overhead gap down. But yeah, still above the 5-day. This 10-day and gap zone at what would that be? Right around 615.50 could be a spot where we could see some support. The growth stocks of the Russell 2000, that's IWO ticker symbol. Slight gap up today, pretty much a doji candle above the 5-day moving average. Not too much to say there. And then ARKK, gap up, closed over the 5-day moving average, tried to get over the resistance gap from yesterday's gap down. Didn't quite fill that on a closing basis, so we still have that drawn. But overall, looking really healthy. We had that 10-day moving average test last week on July 1st, bounced back into new highs, and now we're tightening up again right at new highs. So that's usually a good sign for growth stocks. Then the chart that everyone is watching right now is Bitcoin. We'll use the BTC to show it. Very tight pullback here. Looks like we are putting in a higher low on the 10-day moving average. Got the 50-day moving average catching up overall. And everyone is watching this setup. Just because everyone's watching it doesn't mean that it can't work. If I jump back to NVIDIA, back in 2023, we had a 6-month base where everyone was watching this name. All the growth stock traders were watching this name. It was a perfect base. We had a 2-day shakeout under the 20-day moving average and then exploded for about a 100% move from, let's see, $48 up to $96. So yeah, about a 100% move before we had any real distribution. We had one test of the 20-day moving average, but that's about it. So just because everyone is watching a setup doesn't mean that it can't break out. But what would make it perfect is if we had a little shakeout, maybe to the 20-day or even the 50-day moving average, to really kind of shake out the last people before it takes off. That would be an A plus move for an A plus setup. Next, we have the liquid leaders. We'll just go. Actually, let me sort by price percent change today. First, we have SoFi, new 52-week highs today, big gap up, and actually rallied. I think it was up about 8% or so today at one point. And then you could see sold off towards the middle part of the day where all the growth stocks kind of squatted after the morning, but still closed the day up 3.7%. Some air to the 5-day moving average. So some kind of pullback here would be perfectly healthy. Even like allowing the 10-day moving average to catch up would be good overall. Just a little extended here. NVIDIA, one of the better looking charts in the market right now, and semiconductors is a theme that's working really well. We'll cover that in the ETFs, but NVIDIA up another 1.1%. Really tight trading. We had a slight gap up today, above all the key moving averages, right at highs. This is one that I'll be watching for breakthrough today's high, or even I would look through today's high as an entry. Stop would be yesterday's low for a really tight kind of performance boosting type trade, just as that group is continuing to show relative strength. If we get a nice rally out of the indexes, then this can have another move higher. CrowdStrike, nice kind of shakeout in the morning to the 10-day moving average and support gap. Bounced, closed back over the 5-day. We still have this resistance gap after yesterday's gap down to eat through. So right now, to me, this is just like a neutral chart bouncing between those two zones. Whichever way we resolve is probably the direction of the next trend. Royal Caribbean, great action after making new highs. Basically, two sideways days since then. We tested the support gap, bounced there, haven't even tested the 5-day moving average yet. And if this continues to tighten up over the next couple sessions, then an undercut of the 5-day moving average and support gap could be kind of like a performance boosting buy point. It's a little, it is extended, so I wouldn't be trying to like buy a core position at that point, but that's a line in the sand for this like very short term intermediate uptrend. GEV, great shake out of the 10-day moving average and then big rally up. I'm hoping that this isn't a hanging man candle where we get a gap down and follow through to the downside. Um, that obviously wouldn't be ideal. We've started to see some volatility in this name recently with the test of the 20-day moving average on July 10th, the big shakeout on June 10th, July 1st, and now some more volatility. Just shows you that we're in a kind of a tough trading market as of recently, even though prices are continuing to grind higher. That finished the day flat. Zscaler shook out the 10-day, then closed basically at the 5-day moving average down 0.9%. Robinhood uppercut and failed the resistance gap basically to the penny. If we go to the 1-minute chart and zoom out, you can see we uppercut the resistance gap high by like a penny or two in a 1-minute chart and then immediately responded to that level. When that happens, it's a clear sign that sellers are still in that zone. Um, and we did close under the 5-day moving average. We did close under the HVC from June 30th. So a little bit of a warning sign overall for the market. I think this is the market leader, and the fact that we're uppercutting and failing a resistance gap, then losing the 5-day, is a sign that momentum might be drying up here. Roblox, another sign that momentum might be drying up, is a first gap down in this name. We did test the 10-day and bounced from there, closing at the 5-day down 2.65%. But you don't want to see gap downs, unfilled gap downs on your leaders. And we're starting to see those pile up with CrowdStrike, with Robinhood, Roblox, and CRWV. Unfortunately, we had to close out a gap up zone today where we closed under the 20-day moving average, exponential moving average. We have two gap downs since the highs, and this is basically a do or die spot. I was going to leave this for the long setup, but this is basically at a do or die spot. If we gap up, an opening range break is buyable versus today's low. That would be a nice tight risk entry point on a name that has shown that it has the ability to make monster moves going from 35 up to 100 to 87. Usually the first time you pull back to the 20-day moving average is a buyable point. We did get in there, bounce, and now just 2 sessions later, we're starting to roll over. That's why I could go 50-50 on this setup. And even if I don't trade it personally, I'm going to be setting alerts to get feedback from the market on whether or not momentum is really drying out in the market. If we get a gap up and have that opening range break, then maybe we resolve to the upside, have another couple week move before a parabolic top here. If we break to the downside, then chances are that the overall market just needs some more time to rest. Jumping into the ETFs now, a couple that I wanted to highlight, XOP and XLE led the way today, up 3.2% and 2.7% respectively. XOP back over the 200-day moving average. This is the oil and gas exploration ETF. XLE, the energy sector overall, back over the 200-day as well, opening on a low, closing right near the high. KWEB, the China Internet ETF. This is one that we've been talking about for a couple weeks now. Monster base, multi-year base from 2022 to now, starting to tighten up with all the key moving averages right on top of each other. Looked like we got going today. Some of the leaders in the group did, but eventually we squatted down here. If we can resolve this to the upside, taking out today's high is a buy point versus I would use the 50-day moving average or even the low of the pullback here because this base is so large. When we do break out, it has the ability to make a multi-month move, and I don't want to squabble over a couple percent, whether it's the 50-day or the pullback low, with staying in that name. So KWEB definitely a group that we want to be focusing on. China is the group that we want to be focusing on. Semiconductors, also great strength. SMH, gap up today, rallied into the resistance gap from yesterday's gap down and closed right at that level. Tight trading above the 5-day moving average is always healthy out of a leading stock or a leading group, and that's exactly what this is doing. It's hard to get too bearish on the market when semiconductors are leading, and right now they are. So that's basically, we want to go through these daily recaps and kind of build evidence for bearish signals and bullish signals and be completely objective with what we're seeing. And I'm going to be honest, throughout the recap and throughout my nightly process, I was basically neutral because we're starting to see some issues pile up for the bulls. But after a couple days of pulling back and tight price action, we now have some really nice tight risk areas to manage against. So XBI Biotech ETF, another name that or another group that could start to participate and extend this rally overall. We did uppercut and fail at the resistance gap today, but still closed over the 5-day moving average. You can see the nice little VCP pattern here. Breaking through 85.60 would obviously be good for the overall market. The last group that I wanted to cover today was TAN. This is the solar ETF. We had a gap down today, but I want to point out that we still closed over the 5-day moving average and we pulled back on lighter volume than the previous day. Typically, when you get these kind of tighter closing bars, like from open to close, tighter bars there above the 5-day on declining volume after a big move. That's just healthy action. And I do think solars have bottomed. And when we get to the long setups, which we can go to now, you'll see I have a couple solar stocks on that list. So let's just jump into those. NXT is the first one. This has been on the watch list for a couple days now. This is a solar ETF that has already made new all-time highs. Whenever a stock is making new all-time highs, when the group is just coming off the lows, that's a stock that you want to be laser focused on. We did have a gap down today, tested the 5-day and the support gap, but bounced from there. If we have more market weakness overall, a pullback into the 10-day, into the support gap, into the breakout retest around $61 would be a perfect buy spot that I would try to size up a little bit versus the 20-day moving average there. SEI, great action overall. We actually gapped up on this name, rallied into the resistance gap, and then closed slightly below it. So we still have that resistance gap to get through. But we're trading tight above the 5-day moving average. Volume is lower than the expansion bar, which is ideal. With this, I'm still looking for a pullback buy because I think the market's a little shaky, because solar's still in its like stage 1, potentially stage 2 uptrend. I still think there's just going to be a lot of volatility in these names. So a pullback into the breakout retest, into the 10-day moving average, right around $30 or 30.40. Manage your risk against the 20-day EMA, 29.30 there. And then last, we have Bloom Energy Company, BE. This is a stock that made a monster move from 8 to 26, went sideways. I kept on trying to get in this name here. Eventually did break down with the overall market, kind of put in a couple of weeks trading sideways, and now we're rallying back up to that same spot. 2 really tight trading days above the 5-day moving average. Still, I want to buy on weakness if we kind of pull into the 20-day moving average or the gap zone at 22.50. Buying through the wicks here, it could work. We've just seen that the market hasn't really been rewarding breakout buying. So until I see a couple stocks actually work on clean breakouts to the upside, I'll probably miss this one and then just try to trade it later. But really focusing on that gap zone, the 20-day moving average on that one. We talked about KWEB or China stocks. Really wanted to highlight a few of the ones that I'll be watching. FUTU, gap up, opened on the low, kind of closed relatively weak, but compared to KWEB, it actually closed better. And if you zoom out, we've got a multi-year base here, and that's exactly what you want to see. Big, big bases, and when you can gap up out of a base, that's one of the more powerful signals in the market. Um, I unfortunately don't have a position in this. I have a position in TME, but this is a name that I definitely want to build into over time. I'll just be watching for kind of a pullback breakout retest at that 127.30 area and go from there. HSAI, HSAI. Yeah, I said that right. Also, a Chinese stock that I think this was on the watch list yesterday as well. A little bit weaker than the others, only up 1.5% today, but you see a really nice chart pattern here. Pulled into the 20-day moving average recently, rallied back up right into highs. This is another one where you could buy the breakout through 23.26, like the previous high there. Hopefully that works with like KWEB in China actually working on the right side of its base. That is buyable. Otherwise, a kind of pullback shakeout to the 10-day moving average might be a little bit better versus the pullback low here. Okay, next, sticking with themes, we talked about Bitcoin having one of the best charts in the market right now. A stock that kind of correlates with that is MicroStrategy, MSTR. Basically, just had this blow off top in November, which was still to this day my best trading day, um, trading that parabolic short. From there, had a big extension down to the 200-day moving average, eventually put in a higher low, had a big rally back up. Now we're starting to tighten up and actually look like a constructive chart. And if Bitcoin breaks out of its range, chances are this is going to break out as well. This is one where I if Bitcoin shakes out, then we got the 50-day, the 20-day at 386 as a potential shakeout entry point, or just through today's high. I probably will put some on through today's high as a potential entry versus the 10-day moving average there. ASTS continues to just shake out at this support gap. I think one, two, three, four, five different days. By the end of the day, buyers have stepped in and supported this price action. So now all I'm looking for is another kind of pullback into that area. Buy in that zone. Stop would be the low of the pullback. 20-day EMAs a little extended for that type of buy, especially in this market where I'm not sure if momentum is leaving altogether. It kind of does feel like that, but I would rather buy this on a shakeout and a reclaim of the support gap low, 44.30, sorry, 44.43. And then the stop would be the low of the pullback. We covered CRWV with the leaders, just looking for an opening range break, gap up versus today's low. That's going to be a great signal for the overall market. These next two are also going to be stocks that I use as signals to whether the momentum is drying up or starting to accelerate again in the market. CRCL, we basically have a 2-day pivot here. For the like, we did take out yesterday's high by a couple pennies, but for the most part, an inside day above the 5-day moving average. Just looking for a breakthrough 208, like 35 or 208.60, whatever the high was yesterday. As a potential entry, stop would be today's low. And then SMR, this is a nuclear stock that has started to trade under the 20-day EMA. But if you didn't have these gap zones drawn, you'd probably take it off your watch list because it closed under the 20-day for a couple different sessions. But because we draw these support gaps, we know that by the end of the day, institutions are supporting the price action at this level. All that I'm looking for is either a gap up opening range break to buy versus the shakeout low, or a shakeout under the support gap to buy the reclaim of the low of the area versus the pullback low or whatever the low of tomorrow would be. It has the ability to make really strong moves from 11 up to 44 in just a couple weeks. This is basically the first test of the 20-day exponential moving average, and it's sitting on a support gap. It's in a do or die spot, and the nice thing about trading stocks in do or die spots is you can take really tight risk, 1 or 2%, and size it up appropriately, 20 to 30% of your account, and still risk less than 1% of your entire portfolio on a name that has shown you that it can make massive moves. So if it works, it's going to pay for that risk, multiples of that risk, and if it doesn't work, you'll know right away that it's time to step aside. All right, let's get into the short setups. First one, ACHR. I'm more so using this as an indicator of momentum in the market because overall, this looks like if you didn't have the gaps drawn, this would look like a constructive chart. You've got a little kind of cup building that handle, 50-day moving average is catching up. But we do have three overhead gap downs. Today, we had good action with a gap up, opened on the low, closed back over the 20-day moving average. Now I just want to see if we actually follow through to the upside. That would be a great sign for momentum coming back into the market. Or if we reverse and then lose today's low, that would be my short versus today's high to try to play this for a move into the nines. I nod, another quality looking chart, like basically cup. I don't know if you want to call it a cup and a handle, but basically volatility contracting, contracting, contracting. Looked like we were breaking out today, then reversed and squatted. Still closed over the 5-day moving average, so not horrible. This is one that I personally won't be trading, but I'll be using as a signal. If we can either gap up and then rally back through this zone, chances are momentum is going to be coming back into the market. If we follow through to the downside and take out today's low, chances are momentum is leaving the market. So always good to have a couple kind of signal setups to watch. APP is next. Today, uppercut and failed at the 20-day exponential moving average, the 50-day simple moving average, and then closed at the 5 and the 10. This is one where I'm looking through today's low as an entry. Stop would be today's high. We have another lower high overall in the structure. And I mean, this stock has made a monster move already from $9 up to $500 in a couple of years. Now this looks like a lower high. If the market needs any time to actually pull back, this probably pulls into the 200-day at very least, and that's going to be a nice like 20% move. SFM, another stock that's made a monster move. Sprouts, what is it? Sprouts Farmers Market grocery store that my wife goes to, so she's all about it. Went from $26 up to $178 in a couple years. Had the nice base here, looked like it was breaking out, and then from that breakout has just done basically everything you don't want to see after a breakout attempt. We gapped down the next day, lost the 50-day, put in a lower high, lost the key moving averages again, another lower high, pulled in, another lower high, reversal of the 50-day moving average. Now, if we lose this support gap at 157.40, my guess is that this is a stage 3 top, and then we'll start to roll down into our stage 4 downtrend. SEZL, I did short this already today. Oh, I didn't update the chart. So actually, this is like kind of perfect here. So today we had a slight gap down zone that we uppercut, we went into new highs, and then we reversed at that point. Once we lost the VWAP of the day, that was my short entry versus the high of the day. It was about a 1.5% risk, 2% risk. And this is a name that's already made a massive move from 25 up to 180%. I don't even know off the top of my head what that would be, so let's measure it. Yeah, it made a 633% move in 61 trading days. Incredible stock for sure, but now extended and we could get some juice on the other side. So we uppercut the previous highs, failed at the resistance gap, lost the VWAP. That was this short entry. And then we lost the 5-day moving average. We lost this support gap zone. So we closed that one out. We lost the 10-day and we lost this support gap zone. So we closed that one out. And now we're just looking for like a morning rally that gets that hits the 5-day moving average right at like 171-ish, 172, and then loses the VWAP again as another potential short or add-on to my short. And then I would be looking to play this to like 145 under the 20-day moving average, but into this gap zone for about a 20% move or 20-point move, excuse me. MMYT, if you've been watching these daily recaps. You know, this has been on my short watch list forever. Monster move, $23 up to 120. Stage 3 top. The 200-day is now overpriced and trending down. The 50-day is now trending down. All the key moving averages are trending down. We keep uppercutting and failing at the 20-day moving average, showing that sellers are stepping in every time that this has a mini rally. And this support gap is basically the last thing that stands in our way for a stage 4 decline. I would just be trading this through today's low, or if we have like a morning rally, a loss of VWAP would be an entry versus today's high or yesterday's high as the stop. GRRR, another kind of speculative name that hasn't quite rallied like the other ones have. It's not at new highs, anything like that. And we do have two resistance gaps on the downside. We did touch the 50-day moving average and the support gap undercut and rallied from there, so that's positive. This is another one that I'll probably use as just a signal overall. If we can get through this resistance gap through 2260, that's a positive thing for the market and a positive sign that momentum's coming back. If we reverse and lose the 20-day and have a wedge drop, that's a sign momentum is fading. DFDV, another one that I took short today, uppercut and failed at the resistance gap. That was the entry for me. Then we had a wedge drop through the 5, the 10, the 20-day moving average. This is a name, went from $7 up to $52. Put in a lower high, higher low, lower high. So we're tightening up here. Which direction that we eventually like break to? My guess is the downside, obviously, because I'm short, but it could break to the upside, sure. I would just be looking for a like 1 or 2 day rally into the 20-day moving average as an uppercut and fail as a lower high there to get short. DXYZ, this was on the short watch list yesterday. Instead of following through to the downside, we got a nice gap up and then rallied through the 5-day moving average. Now we're looking for the uppercut and fail of the resistance gap, the 20-day and the 200-day moving average as an entry. Then the stop would be, I don't know if you could stretch to the 50-day. I would probably just use a 2 or 3% stop on that one. Then last stock, HIMS, uppercut and failed at the 20-day exponential moving average. Got into that resistance gap zone again and then closed weaker, closed right at the 10-day. This, we're either looking for a gap up that loses the VWAP, loses the opening price, or follow through to the downside. Losing the 5-day moving average could be the other entry. So that's going to be the daily recap for Tuesday, July 8th. Basically split down the middle. I'm trying to be as objective as possible. I think momentum is starting to dry up, but I think tomorrow is going to be basically will let us know which direction that we're going to head here. There's a couple of industries that look primed to go higher and to break out, continue the rally, but we're starting to see a lot of signals that momentum is drying up. From here, we'll tune in tomorrow for that recap and make sure you're using the link down below to try Deepvue completely risk-free. Don't even need to put your credit card information in until July 27th. And then use those links to download all my watch lists, my screeners, data panel, and column sets so you can use the platform exactly how I do. Have a great night, and I'll see you guys in the next video.